Welcome to another week of the Single Woman Economy brief. And I know I used to call it a brief a lot, didn't I? And now I've evolved it into the Single Woman Economy desk. I'll tell you all about that another time. But essentially, as you know, this channel, we talk about the invisible contracts that govern women's lives. And one of the biggest invisible contracts is around money. And when you're a single woman, it is so important that you understand the economy, that you understand finance and money, because being well resourced is critical for single women so that you can create infrastructure in your life that allows you to exist, enjoy, and in peace. So each week, we talk about the single woman economy here on this channel. We've talked about quite a few: the great wealth transfer, the single woman risk premium, and this week we're talking about the debt premium. So do subscribe to this channel, because if you are a woman who's interested in the invisible contracts that govern our lives, and if you're a single woman who wants to understand money and unlock opportunities in your financial life, this is the place you want to be. So do subscribe. Now, debt is a silent killer, and we know that there's a lot of shame in general around having debt. And I would always preface this by saying, yes, there is a type of debt that you can manage, that you can leverage to start businesses, purchase businesses, and achieve all sorts of things in life. However, there is also the type of debt that can actually be rather onerous and a burden on people. And a lot of money related issues are emotional. Okay, and so often as human beings, we carry a lot of shame around money and debt. And depending upon your culture, your upbringing, you may have been sent all sorts of messages around money, how to spend it, what responsible spending is, and also how to maybe avoid having debt altogether. It really is a silent killer, and we see many instances in which people's mental health is significantly impacted when it comes to having debt. So if you are a single woman and you're carrying debt alone, there's no partner to split the bills with, rent, mortgages, there's no second income. And so when something unexpected hits, we've all been there, something wrong with the car, the boiler, just unexpected costs can really offset your finances that particular month. And sometimes there's no one else there to say, don't worry, we'll fix it, we can band together, right? And so every decision about what to pay, what to defer, what to sacrifice, that is yours. It's a singular decision. And we know that these financial systems generally have not been set up for anything outside of a two-person income or two-income household, for example. And when I say, we won't get into that in this video, but what I'm seeing is a lot of conversation obviously around women and money, but there is a very unique experience of being a woman who is single and managing money and debt alone. Earlier this week, I shared my experience, one of my experiences when it comes to debt. I had multiple six figures in debt after closing down a bricks and mortar business years ago. And I carried that responsibility by myself. And what I found very interesting in the comments is that there was a comment about, I mentioned the fact that I did not file for bankruptcy, and there was a specific reason for that. But of course, this is not financial advice, and I was in no way encouraging or discouraging women from leveraging existing legal structures, okay, that enable you to legally exit certain situations. But my point here is this: a lot of people have experiences with debt that they don't speak about openly because they are ashamed. So I know this from first-hand experience, what it's like to carry and manage and pay off debt as a single woman with no other financial support. In addition to that, my formative career was actually in consumer credit, which will probably explain why I am so interested in contracts, terms and conditions, and the small print, because my entire job was a regulatory compliance consultant. So I worked for big banks in London and in Milton Keynes in the regulatory compliance teams, and my specialism was consumer credit. So I have seen firsthand, because I've investigated hundreds of consumer credit cases, how debt impacts families, how debt impacts individuals, and what happens when you don't understand how to navigate debt, and how to correspond with institutions when it comes to your debt. So that's kind of my background and experience in this area, and why I'm obviously so interested in bringing you research and insights into various aspects of the economy and finance, so that you can equip yourself as a woman to be more informed in terms of the way you are managing your finances and the way you look at money. Your relationship with money fundamentally. Now, one of the first things I want to do before we dig into some of the research that I uncovered when it comes to women, single women in debt, is that the research shows that single people, seek financial advice far less than married couples. And this can be a problem when you have debt, because you may well end up struggling for longer. Now, you also, therefore, if you're open to seeking advice to help manage your debt, you're going to receive various types of advice, especially if you go to like non-profits and charities that are set up to advise people around debt. Do not, don't become too scared of asking for advice and getting information so that you can make more informed decisions. I genuinely do not believe that debt has to be a life sentence. There are ways of organizing and structuring debt so that you can still live your life, and you can also, of course, meet those obligations. But what I found was there was a really interesting piece of research that was released in February 2026, so that's earlier this year, by Ali Bank, and it was actually a cost of singledom survey. So although it was not broken down in a gendered way per se, they did survey single people. And what they found was that 39% of single people that they surveyed said that debt is the most challenging expense to manage on their own. Not utilities, not rent, not food, but debt. Because, of course, it's the thing sometimes with no fixed end date. It compounds while you sleep, because if it is a debt that obviously accrues interest, that is happening in the background, and it shows up in every financial decision that single people are making, sometimes for years on end. Because if you think about it, when you apply for a mortgage, if you apply for another credit facility or a loan, they're going to ask about your existing liabilities, and they're essentially weighing up risk. 61% of singles said that covering all of their expenses, 61% of singles are covering all of their expenses or on their own, according to this research. But only 1/3 of them names this as a single tax. I thought that was interesting, because most people are absorbing the structural financial penalty of singleness without naming it a single tax. And that's interesting, because actually I've seen recently journalists and just, people sharing their experiences on TikTok, for example, naming this as a single tax. But the Ali Bank, who released this survey, was saying that actually less singles will actually put a name on it. Even though, of course, the majority of singles are managing their finances by themselves. Now, I talk more about that particular survey and that research over on Substack. So as you know, every Friday, I release a Substack specifically about the single woman economy. And the topic we're talking about this week is, of course, the debt premium. So I kind of encourage you more to go over to Substack and subscribe, obviously. Subscribe to this channel if you want more of this weekly. And I do a full write-up really on this particular issue around debt and single people and single women specifically. Now, here's the thing. One of the stats that comes up quite often in relation to women and home ownership is that there are high levels of single women purchasing homes. Now, a mortgage is a type of debt. And although women may earn more, for example, they get denied more often than men when it comes to mortgages. And I found this really interesting. Okay, so there's like a 29% higher likelihood that a woman is denied a mortgage. Okay, so single women versus solo single men. Okay, and then on top of that, when you look at that median income, women in certain age brackets, of course, not all, do have a higher income. You can see that difference between them, $73,000, $66,000. Now, of course, this is US data because that is the most recent data I could actually find. So although in certain age ranges, women have higher income, they actually have a higher denial rate when it comes to mortgages. Now, this isn't really about the credit score itself. It is because the system, of course, was designed for two incomes and hasn't been updated at all. Now, what's really interesting, of course, is that there's still a pay gap in place, okay? And also, of course, women have higher credit card debt rates. That is an interesting piece, okay? So these are the conditions often that women are borrowing within. Okay, the inflation rate at 4.2% in the US year on year. And there is a kind of pay gap, dollar for dollar, between men and women. So my research revealed that the credit worthiness standard was indeed designed for two income households. Now, we kind of knew this already, right? Now, of course, the law does prohibit using gender as part of the criteria, but actually as a result, women are often affected by this. And I found out that 15.7% of women are denied mortgages versus 12.1% of men. And really and truly, okay, earning should be more of a qualifying factor, but actually it's not. And if you see me looking slightly to the side, it's because I'm looking at the slides as we go along. Now, here's another interesting one that won't be a surprise necessarily if you're in the US, because student debt has a far higher penalty than student debt, for example, in places like the UK. Okay, student debt is not something necessarily that you can just get rid of in the US, whereas in the UK, generally speaking, your student debt is obviously deducted from your salary, but there aren't like these high penalties. Yes, there is interest on kind of student loans in the UK, but actually it's not so onerous of a debt. In fact, I think that sometimes the general attitude to student debt in the UK is a little bit more laid back because it could take you years to pay it off. And there's also a salary threshold before they start deducting payments from your salary. And so I think that in the UK, there is a different attitude to student debt overall versus in the US. It's a far bigger conversation. And actually, there's some really interesting kind of companies out there now that are there to aid people in the US in terms of paying off their student debt, and also how that student debt can be attributed in terms of building your credit. Again, you can tell I come from this environment. I'm very interested in the intersection between AI and debt management, and how debt management companies are using AI to collect debt, but also how AI may be used in the credit worthiness and credit assessment processes, which is why I'm aware of these companies that exist that are trying to reframe the way debt is dealt with and approached, particularly in the US. The US is a little bit more advanced, I would say, than the UK. And when it comes to the use of AI, when it comes to debt, what we see is that debt management companies and institutions have access to artificial intelligence as a technology and can use it in the process. But the bit that is missing is consumers being able to use AI to their advantage when it comes to managing their debt. And that was something that it was a project that I worked on for about a year, because I'm fascinated by that asymmetry. The fact that institutions have access to artificial intelligence and can use it in various ways in the debt cycle when it comes to managing and collecting debt, but consumers don't yet have access to using that in a way that they can leverage, and it kind of evens out the power. My whole kind of area of research was, how do we dignify people who are in debt? And could AI, which I do believe it can be, I mean, I created a tool on ChatGPT within an hour that could actually read debt letters and help people to draft debt letter responses, have a script to use when they call a bank or a lender and they're discussing their debt, help them reply to debt correspondence. It was a whole annual project for me that I worked on for a year, because I'm so fascinated by how we can empower and enable consumers in debt and how help them manage their debt using artificial intelligence. Now, obviously, this is a heavily regulated space, and that's why I think, I don't like seeing asymmetry in power and access, you see. And so that's why I was kind of doing all of that research during that time, given my consumer credit background and my kind of, interest in artificial intelligence more generally. But if we look at the student debt pipeline, particularly in the US, women hold 63% of US student debt. Okay? And what that means is that often 12 years on average, men will clear 44% of their balance for student loans and student debt, and women will clear 28%. All right. And so unpaid debt will feed straight into the ratio when you are applying for credit and certain types of debt like mortgage. So I think this is a really interesting kind of factor for women when it comes to managing finances. And I see a lot of broader conversations happening around, whether or not it's necessary to go into debt. This is why, of course, there are a lot of families in the US and also all over the world who try to, if they're in a position to, alleviate the burden on their children if they are choosing to, go into higher education, which of course needs to be financed ultimately. But also you can see, in broader conversations about relationships and, people's relationships with money, the debt that they bring into a marriage or relationship. This is why student debt in the US kind of often factors into that assessment, because actually we see the evidence here that women hold more student debt in the US, and it can take them longer to pay that debt off. Now, there'll be various reasons for that, of course, along the way, but I thought that was interesting. And then here we saw in this cost of singledom survey that for single people, 39% of them said that debt is the hardest expense to manage alone. Okay, and we saw that 29% of single women worry about money daily. Okay, so yeah, how interesting. Just as a side point though, women tend to score lower. Women tend to score lower when it comes to debt, more generally. And even though you're not meant to be discriminated against on the basis of your gender when it comes to debt, marital status can leak into the model and into the application process, because obviously if you make a single application, etc. So very interesting. Now, this is why I think it would be great to see in financial services more generally as time progresses that financial services build products that are built for single income borrowers from the beginning. And I think that is very, very important. 40% of working age adults are single. And this is actually across the spectrum. This is why I also do these briefs every week, because I love to horizon scan and I love to kind of think about, in an ideal world, how would we like key institutions and sectors and infrastructure to market to single women, for starters, okay, and actually view single women as a key customer group. We do have disposable income. I have a kind of special edition of the Single Women Economy Brief coming out around the travel sector. And what that showed is that women who are over 50 who travel are premium travelers. On average, they spend $18,000 on travel. So you can see, depending on the age range that is being researched and analyzed, We are a strong consumer buying group. Women make up over 70%. They are in over 70% of households. We are the dominant decision maker when it comes to money and how money is spent. And so when you think about single households with women who are single, we are key consumer groups that I don't think that sectors have recognized. And we see the evidence of that in terms of how they market to us. So there'll be more on that when I bring out the travel edition next week. But every month I choose a sector or an industry and I deep dive on how they market to single women, if at all. And so I think it's really important that these kinds of industries start thinking about how they market to single women, how they create products and services. Last week when we talked about the great wealth transfer, there's a gap in terms of financial advice for single people who are building wealth, single people who may inherit money. It may not even make them wealthy, but might inherit money. There's a real gap there in terms of the advice that is available for single people and single women. And so here are some of the industries I think that we should be watching, and they should be observing this shift that is already happening in society. Fintech and alternative lending. Okay, obvious one. Credit scoring technology. Okay, so Fannie Mae dropped the minimum score in 2025. Okay, and so these things are really important for us to be aware of as single women, because as more of us become more financially literate, we are living for longer. We may well accrue our what we think wealth is. That doesn't mean you have to be a billionaire or a millionaire. But actually, when you are in control of your money and you're able to generate money, we need to be aware of these kinds of things. And I also think in terms of employee financial wellness, a lot of employee packages and benefits are really geared towards, women with children, women in partnerships. And I think more organizations need to think about single employees and think about their benefit tracks when it comes to this. But also, if you think about financial well-being more generally, if you're worrying about debt on a day-to-day basis, this is why we see a rise in the use of the early payday software that's out there. So you have these companies that enable employees to unlock their salaries earlier or on a different date. There's a real reason why that is becoming more popular. And if you are a single person, you're a single woman, and you're worrying about money and you're carrying debt as well, these are the types of services that are usually parts of the kind of employee packages and employee perk packages. This is why I say that I think organizations should be looking at these things, because they may have more employees than they realize who want to realize and use some of these benefits. And I'm pretty sure if you think about the global pandemic during COVID, I reckon there'll be certain kind of support packages that were in higher demand than others because of this reality. I would love to see a lender build a single income kind of financial product around debt. I would love to see that. So that's this week on the single woman economy. We looked at the debt premium and single women. Next week, we're going to look at solo motherhood, because yes, it is an economic decision to decide to go into solo motherhood. And I'm fascinated by it. Can't wait to share the research and the insights around solo motherhood and the economy of that for you as a woman, if you are choosing, of course, to opt into solo motherhood. And like I say, subscribe, because every single Friday, we have the Single Women Economy desk. And then also every month I do a deep dive on a specific sector and look at whether or not they've recognized single women as a core consumer group. And the sector I'll be focusing in on is travel. So I will see you next week.